Major shake-up in global energy markets now. OPEC Plus members will implement a voluntary reduction in crude oil output, slashing production by more than 1 million barrels a day. Well, oil prices jumped over 8% initially on Monday. On that news, they are up now around, well, what can we see here? Around 5.75%. The move led by Saudi Arabia, which maintains that the decision is to support market stability. But the International Energy Agency is expecting a surge in demand later this year, leading to fears that this will add inflationary pressures to an already sluggish global economy. So tonight we ask, is this decision short-sighted? Well, joining us now to break all of this down for us is the CEO of Kamar Energy, Robin Mills. Before I get to that question, let's start with why you believe this decision was made now and by those who jumped on board. These were voluntary decisions, after all.
Yeah, absolutely. Look, and I think one thing that's interesting about this decision, as you say, the International Energy Agency sees a surge in demand later in the year, but so does OPEC itself. In its official numbers, and yet they've decided to cut production.
Which doesn't make sense on the surface.
It is puzzling. Okay, we had a bit of weakness the past month in prices, banking worries and so on. Fingers crossed we seem to be through that now. The outlook for demand is reasonably good. We see quite strong demand in products. US inventories are down. Chinese economy seems to be picking up, and Chinese demand picking up. So it's not obvious that there was a cut needed right now. And as late as Friday, we were hearing that no, there'll be no change. And then, of course, suddenly on Sunday, just before the OPEC meeting, the official meeting, the announcement comes out of this cut, and the various members are coming out with so-called voluntary cuts, right? So they're each putting forward their own figures one by one.
So I guess that raises the question again, and we can talk about whether you believe this is short-sighted on the part of those OPEC members who have decided to cut, and the biggest cuts, of course, coming from Saudi Arabia. Russia, to a certain extent, already priced in 144,000 barrels, for example, from the UAE, where we are. But again, if it's not about macroeconomic macroeconomic story, then why?
Well, look, I say, there's a couple of possible elements feeding into that. I think one is that these countries and their national oil companies have seen weaker demand coming. They're in the physical market, and they're seeing that the next couple of months their customers are not too optimistic and not demanding too much, and that's led them to change their mind at rather a late date. That's one. And I think the other side is, why is this such a surprise? Like, out of the 14 analysts who were quoted on the news, none of them were expecting a cut. Right, so I think that tells me also there's some element here of let's as Prince Abdulaziz, the Saudi energy minister, often says, let's make the speculators ouch. Let's spring this on them at the last moment.
Yeah, that's fascinating. You bring that up. There has been talk that this is, this is a slight knock by the Saudis to Washington and to the Biden administration, who had promised to replenish the reserves that had been drawn down on, of course, last year, and that the speculation goes that there was a promise made, but that actually hasn't happened. So they haven't taken oil out of the market, and this is a kind of, this is a sort of retort to that. What do you make of that?
I think it was a missed opportunity. There was some price weakness. There definitely was a chance to jump in there and refill the Strategic Petroleum Reserve a bit. They couldn't have done much in a month, but they could have done something. There was a missed opportunity, yes. But it was really the big issue that changed this decision? I don't think so.
So when we ask, is this short-sighted on the part of the Saudis and the others who have made this decision, you say what?
I think, look, it's a bit of a risky decision because, the economy seems maybe we're through the worst for now. Inflation has been falling. We thought we were at the end of or getting close to the end of the rate rising cycle. Now, if there's more pressure on inflation, there'll be more need for rate rises and a slower economy down the line, less demand. I mean, this is always the balance. How high do you risk going with prices before it hits the general economy?
And of course, that's the kind of the Rubik's Cube sort of spinning around, isn't it? Because we are looking at what now seems to be a floor under the oil market that at least the Gulf producers are looking for at around $80 to $85 on the barrel. If that's what they want to see, that's their choice, right? I mean, ultimately, the markets will work that way if they work the supply and demand equation accordingly. Does that sound like a figure that is reasonable, given what we know about what's going on with Vision 2030 in Saudi, and what we understand to be a sort of, a reasonable oil price for these great oil producing countries?
Well, these price floors, they're pretty elastic. I mean, they're more like trampolines, right? And when things get better and the prices are higher, people's floors go up, right? But $80 a barrel for now sounds reasonable. And, that's not that high in historic terms, particularly when you allow for inflation. It's a bit above the historic average, but not much. It's not something that you would say, oh, this is $140 a barrel and it's going to crash the economy.
$100 on the barrel is what everybody's saying now. Where are we headed? Is that where we're headed? Well, we know we've already blown through that in the recent past. Are we headed back that way?
I think there's a very good chance that, third quarter will be at $100 or more. We were kind of looking that way anyway, to be honest, and I think this cut adds to that.
Americans have criticised this response, and let me just stick up what the US response has been. We don't think cuts are advisable at this moment, given market uncertainty, and we've made that clear. We're focused on prices for American consumers, not barrels. Clearly, OPEC Plus operating completely independently of US concerns right now. And that is certainly a less aggressive position from a US administration who was absolutely catatonic back in October when the OPEC Plus cartel originally cut production by 2 million barrels a day at a point at which gas prices at the pump were really worrying US investors and really worrying the Democrats around the midterms. Now, at the time, the Saudis said, this has got nothing to do with politics. Read our lips. This is not a political decision. Frankly, there is politics going on when these decisions are made, isn't there?
I think it's a pretty mild US response, probably the mildest response you could have gotten. Yeah, okay, fine. There's no immediate political trouble on the calendar, so I think it was unexpected, but not catastrophic from the US point of view or the administration's point of view. However, what I do think is this is not a politically motivated move in itself, but what it does show is that Saudi Arabia in particular isn't too worried about the US response in general. And this is not just in the oil market, but in various other actions the past few weeks.
They're not worried at this point about market share. That's a sort of done deal, is it?
I don't. Where's the competition for them in production coming from? It's not from Russia, which is in the OPEC Plus group anyway. The US shale has really slowed down. Doesn't seem that they're too worried about that. You've got little bits and pieces from Brazil and places like that, but not something that seriously challenges the OPEC Plus group.
It's always good to have you. Really important to get your insight and analysis. It's a big story for the world, big story that's coming out of this region, of course. And this is all about how we sort of connect the dots between what's going on here and the rest of the world. Thank you very much indeed for joining us. Let's, before you go, get reaction to this from Washington. As we've been saying, the US has called output cuts, and I quote them here, unadvisable. Jeremy Diamond is